Hey everybody, welcome to our latest vlog. Today we are with the great, almighty, all-powerful Mr. Peter Puzo from Dominion Lending Top Producers, and we're going to be talking about all things mortgages. I'd like to welcome our good friend, Mr. Peter Puzo from Dominion Lending Top Producers. Again, he went on to explain and talk to us all about all things that are mortgages, as I mentioned earlier in my intro. And there's been a bunch of announcements that come out over the last 2 days. Actually, there's a big one happening today. There was a big one that happened last week. We meant to do this video last week, but we ran into some technical difficulties. So we're doing a bit of a revision for today. But first off, let's get to the Bank of Canada reducing its overnight lending rate by 0.5 point.
Yeah. So the consensus was split 50-50 on whether we would see a 1/4 point cut or a 1/2 point cut. We got 0.5 point thanks to those horrific unemployment numbers. So Bank of Canada reduced their overnight lending rate by 0.5 point. As a result, all major banks have reduced their prime rate by 0.5 point. So we are now at a prime rate of 5.45%.
Nice, excellent. Okay, so which means, again, if you have that variable rate mortgage or the line of credit, those are where the two things are coming into play right now, most important.
Yes, so all variable mortgage rates will fall by 0.5%.
Right.
Some payments will adjust, some will not, depending on your lender. And all lines of credits rates will drop by 0.5%.
So good news all around.
So we were hoping to see a little bit of a pullback in the bond market, which really hasn't happened yet. But that being said, we're hoping that in 2025, we'll see fixed rates come off a little bit. But right now, we're still, relatively attractive in the low 4s, which is nice for anyone looking to purchase or refinance a property. Variable rates are currently in the 4.6, 4.7%.
Which is good because, again, a lot of people who got mortgages in 2020, right, are now going to come up for renewal going into 2025 because a lot of people would have got on those 5-year fixed rate mortgages. Yeah. So with the variable rate coming down, hopefully people have been paying down their mortgages during that time with their rock bottom interest rates. Yeah. And now with the fixed rates, they're obviously not where they are back in 5 years ago. Yeah. And we actually don't want to see that.
Yeah, no, you won't.
No, and we don't want to see it because that means something catastrophic has happened.
Yeah, for sure.
And it means that's not good. No. Right? So I think, would you say we're probably more in line with a relatively healthy rate environment?
I've always believed that in doing this for 25 years, 25 years ago, we had discounted rates in the 7s. Right. So, 4% is very healthy, I think, for everyone. Yes, real estate prices are much higher than they were 25 years ago, but for sure, I think 4% is healthy for not only the consumer, but also the financial institutions.
Yeah, no, definitely. And I can take it back even a step further. When I started 30 years ago, we were just coming out of double-digit rates. Wow. So think about that, right? Yeah. So, even when I got my first mortgage, which would have been 97, I had 6.25%. on a 5-year fix back then. That's 1997. Yeah. So if you think about where we are today, it's historically we're still looking at a pretty good position.
Yeah. The contrarians will make reference to the property values being triple what they were then, but we'll stick with the interest rate story.
Okay. The real estate prices we'll save for a whole other
Not our fault.
That's a whole other conversation, another vlog we'll save for another time. Okay, so now the other big news is, as of today, right, CMHC has now increased the amount that you can borrow on a CMHC mortgage. Yes. Which means that the Canadian Housing Mortgage Corp, an insured loan, has now gone from a maximum of $1 million up to $1.5 million.
Yes, with a couple of asterisks.
Right.
So
there always is.
Yeah, there always is. The government can't make things easy. To complicate things. So with the 30-year amortization on those CMHC mortgages as of today, you need to either be buying a new property, new build, or you need to be a first-time buyer. If we have more than one individual buying a home, we have 2 individuals buying a home together, one of those individuals must be a first-time buyer in order to take advantage of the 30-year amortization period. If not, they can go with a 25-year am. Right. Still with that $1.5 million purchase price ceiling. Right. So, and then explaining in simple terms also too, is that means that if you're going to stay in that home for the next 30 years, technically an amortization period means that you'd have paid it off over 30 years, so you're good to go. But if no one stays in their home for 30 years. So if they go to resell it and they want to go on to the next property, both of the people now have lost their status as first-time buyers, so they have to go into a 25-year am. or they can continue on whatever AM they're on.
Right.
So if you are in a 5-year, you can port the mortgage and you can port the premium.
Okay.
So I would assume CMHC, if you're in that property for 2 years, you got 27 years left, 28 years left on your AM, that they would allow you to port that to the new property.
Right. Okay. So,
but yes, you're no longer a first-time buyer.
Right. Okay. So basically what, in a nutshell, these rules that come into play are really, let's call it, for simplicity's sake, they're really geared for the Vancouver and the Toronto market.
Yeah.
So given that they're the two most expensive markets in all of Canada, the two highest priced real estate and most competitive markets, that's really it's going to allow that buyer that today was, say, stuck at $1 million, dollars, $999,999, couldn't go past that on a multiple offer, can now all of a sudden stretch themselves to $1,050,000, $1,150,000, where they wouldn't have had that advantage from before.
Yes, and again, purchasing a property for up to 1.5 with less than 20% down comes with a cost.
Correct.
And that cost, which comes from the insurer, which is CMHC or any of the other two insurers, that cost is added to the mortgage.
Right.
So depending on the amount you put down, the more you put down, the lower your mortgage amount, the lower your CMHC premium.
Right.
In Ontario, there is provincial sales tax that is applicable on the premium. That is paid on closing.
Right. Okay. But the rest of it can be rolled into the mortgage.
Yeah.
So okay, that was great. Okay. So going into 2025, what do we see with fixed rates and variable rates?
Well, fixed rates hopefully would see some downward pressure. You referenced earlier, some economists are more aggressive than others. I think we will see quarter point cuts going forward. The Bank of Canada made that pretty clear in their press release. So I wouldn't expect any more jumbo rate cuts, but quarter point cuts as needed.
Right.
If we get a couple in the first half of 2025, that'd be great.
Yeah.
And hopefully at some point in 2025, we have fixed rates that start with a 3 instead of a 4.
Well, and you think with the variable rate, do you think we'd see it get down to maybe, say, like 4.75 potentially?
Yeah, 3/4 of a point I think is reasonable.
Right. Okay.
And then you'd have variable rates in the high 3s. It's pretty attractive.
It's not bad. Like I said, when I did my first mortgage, back in '97, I had 6.25 then for a 5-year fix. So you think about where we are today, obviously prices have come up quite a lot since then. Let's not argue that point. But you think about where we were and where we are to now, we've made some nice, it's coming back in line where we're in that, I think, which is really important, that healthy rate environment. Yeah.
So you've been a homeowner for 27 years.
Yes. That's very good math, Peter.
So you were 18 when you bought your first house.
You're very generous. I wish, thank you. Okay, so basically, I think it's a relatively positive outlook going into 2025, both from a borrowing standpoint and from a real estate standpoint. If you need any more information on mortgages or what to do, how to qualify, this is the man, the myth, the legend himself, Mr. Peter Puzo. You can email him directly, peter@mrmortgage.ca. He'd be more than happy to answer all of your questions. Am I right?
My pleasure.
Okay. And otherwise, reach out to him, Peter Puzo, Dominion Lenders, top producers. This guy is amazing. Otherwise, for everyone else, thanks for watching. Take care, Peter. Thank you for doing this so much, buddy. I appreciate it. You're the best. Thank you.
My pleasure.
Otherwise, take care, everybody. Happy holidays, and we'll speak to you all soon. Bye-bye.